little bit ago. So if you didn't watch that, yeah. Right now we need to move out of. All right. So anyway, let's get on with it. What's going on in the futures market? I'm easing back into things. I'm not just jumping both feet ready to go. We've been off for a couple of weeks. There's been a lot happening in the news, and major players are coming back to the table. So, as that happens, there's some turmoil in the marketplace, and we want to just kind of ease back into things. Be sure that we've got a solid plan and that we're following that plan. So, back to my rhetoric. I know the same thing I always say: have a plan, execute your plan. That's how you're going to get your edge over the long term. There's no other way to do it. All the fancy indicators and trading systems and all that stuff in the world isn't going to change anything if you don't stick to whatever that plan is, right? So step one, have a plan. Step two, stick to the plan. Anyway, so let's go ahead and jump into it. I'm just going to take a couple of minutes and run through what's going on over on the ES, the CL, and the GC. So the E-minis, the crude, and the gold, right? So let's go ahead and get into it. Had a big retracement yesterday as the new market session got going. Just sold right off. I think it's a good indication of the up by the stairs, down by the elevator old adage. So yesterday, big sell-off as the new session got going, and now we're opening up into the kind of the holding pattern here. We've got some news this week. Tomorrow we have the ADP report, which comes out, which is the precursor to non-farm payroll. And then of course Friday we have the unemployment numbers and the non-farm payroll numbers that'll be coming out. So that'll be interesting to see where that goes. There's still the market news, or I'm sorry, the market's still kind of reacting here and there as we have new news blurbs come out around the virus and potential additional shutdowns. We've seen some borders closing again and whatnot. So that could be a hindrance to business and business continuing to improve. So we'll see where that goes. We don't want to try to front run anything. We're not here to prognosticate and try to project our emotions and our feelings and our thoughts onto the market. We just need to do what the market tells us to do. Whatever our plan is, we need to worry about that, get the emotions out of the way, get the our feelings out of the way, and trade what the charts tell us. So that's the beauty of having a solid plan. For the BTX method, for example, yesterday we're pulling back. So as we came into the new session, 4-hour bias is long, 30-minute bias was long. So we'd be looking for long trades based on that. So the method says to wait for a pullback and then trade on a breakout of that. So we can see where it was pulling back, and we're getting signals saying, hey, we've got we're still in a long position here. Look for a breakout of that previously closed candle. Never broke out, so we never took a trade. There's no trades yesterday. Today we've got a mixed bias. 4-hour bias is still long, but the 30-minute bias is short. So for E-minis, for the S&P here, we're big X. We're not going to do anything with that until the market either starts to move back up or moves down enough that we have a confirmed bias to the short side. Right now it's a mixed bias. We don't do anything with it. Crude, we have a mixed bias as well. 4-hour bias is long, 30-minute bias is short. We are seeing a little bit of a pump right now. So, if this stays up here in the next bit, I think we'll see our shorter term bias, our 30-minute bias, cross above, which would give us the opportunity at that point to start looking for pullbacks and then take trades in that long direction. Yesterday, BTX method, again, keeps us out of the market. Actually, would have taken the trade here yesterday, would have taken a trade and closed out for a loss, smaller loss than was initially anticipated, but still would have taken out for a loss. And then the future signals from there were invalidated because it kept pulling back. So for right now, we don't have a trading opportunity, but if this continues to I think where we close, when it closes up, we'll probably see our shorter term bias get into that long confirmation, and we'll be looking for long trading opportunities again there. Gold, we're in a long bias. We have 30-minute bias is long, 4-hour bias is long. So for gold, we'll be looking for a pullback to see if we can make lower highs and lower lows. And then at that point, we'll play a breakout up the previously closed lower high. But right now it needs to pull back. You know, we're not trying to just buy, kind of blindly buy into this move. We'd like to see price pull back, get a little better price, and then, you know, get a breakout going as price pulls back just a little bit from there. So again, just to recap it, nothing on E-minis right now, or on S&P, nothing right now on crude, unless we get the bias confirmed to both be the long bias. And for now, we've got a long bias on gold, so we'll be looking for long trades on gold, but we would like to see a pullback with the lower highs and lower lows where we can play a breakout of a previously closed lower high. So we need to see gold pull back a bit before we can do anything with it. So that's what we've got for right now. I will be making changes to this indicator here probably within January, where we're gonna give a little more of a easy to see dashboard, if you will, for market bias. So we'll put something out up here that shows us what our biases are, so we can pretty much have like a red light, green light for each of the different pieces that we're looking at to confirm our trades, just to make it even easier than it already is with our signals here. So keep your eye out for that. That's coming up pretty soon. All right, so anyway, that's it for me for right now. I'm gonna leave you guys here. I did go over my 5-minute time frame, but I think it's good to do that. Big takeaways. You know, ultimately, you know, it's less about, you know, it's less about what am I wanting to say here? I guess the big takeaway is have a plan, stick to your plan. Don't get impatient. You know, everyone's been off for probably a couple of weeks now, and the markets are going again, and we're all eager to jump in. But don't let that eagerness to jump in cause you to violate your trading plan and your trading rules. Those are what keep you sane, they're what keep you safe, and that's what makes you profitable over the long term.